Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, August 20th, and I am like a kid in a candy store. There is a lot going on. Markets are finally on the move. We've gotten some decent reversal patterns. Things have been kind of quiet overnight after the yesterday's move, but things look good still. So we'll hit DXY, Euro, Dollar CAD, Kiwi Dollar, Aussie Dollar, Sterling Dollar, Dollar Yen, both with outside day reversals, mind you, yesterday. We'll take a look at gold and we'll wrap it up with some dollar peso. Haven't really been involved in peso this week, but we'll hit those levels. Any other questions or trade setups? As always, feel free to throw them in the message board at any time. Jay, good morning to you. Kay, Rowan, always a pleasure. So where do we go from here? Let's start off with the DXY. Here's the weekly chart. So the basic premise that we've been talking about over the last 3 weeks is some sort of reactive rebound recovery on the back of this 8-week decline off of either slope support, lower parallel of this pitchfork, which we've been following for quite some time, off of channel support, just off the most recent decline off the highs, off of yearly open support. 2018 yearly open gave you 92 and 28. So this whole zone is something we've been watching for quite some time. We don't have the validation of a full-on reversal or rebound yet, but certainly the initial at least signals, indicators are looking pretty good. So we'll watch the weekly close. Again, note that on a weekly close basis, we have not been able to invalidate that slope, and this series of parallels has been exquisite. A lot of times it's always good just to go back and take a look at the closes to see how clean we've been. Median line support, break, median line resistance. Parallel break, here's the lower parallel. So it's basically all about this region here. And we've been looking for a reaction for the last couple of weeks. As it stands right now, what are we working on? 9 weeks down. Absolutely. It's just pretty radical. Last time was back here. 9 weeks down. And that only saw a little recovery of about 2 weeks, pause for a while, and then resumption, which is why on the broader picture, even here, when you're looking at a trade where you had like 12 weeks up, that was only a very small interruption. But the point being is that we haven't had one single weekly rebound yet. So we're just looking to cautiously play this, or I've been playing this cautiously. As I've been telling you guys, here's what it looks like on the intraday charts. So DXY on the daily, pretty darn clean. And we were talking about this, in the webinar on Tuesday. If this was going to be a break, remember that even until basically Tuesday, we were still trading within the August monthly opening range, which was taking shape right above last month's low, which was the yearly low, right? So the onus is on a break of the monthly opening range to accelerate the drop. Here was yesterday's trade session. Wasn't an outside day reversal in DXY, although some other dollar majors did postmark such a move. Here's a really nice hold and rebound right off of yearly open support from 2018. So again, we're not out of the woods yet. I'll show you the moves that we've been in. DXY, as it stands right now, we want to see how today's sort of close materializes. Here's that trigger that we've been talking about, the daily chart. We haven't gotten a daily close above, or did actually yesterday might have materialized a daily close above. Long story short, strong divergence into a trigger break. These are typically our favorite signals. For those of you who've been with me for a couple of years, I used to be really big on trading with RSI triggers, specifically on the near term. Kind of went crazy with them for a while, but eased off over the years, right? Just over experience, you've seen, again, all oscillators are backwards looking, and sometimes if you wait for the trigger, you miss the move. But it's still a great way to serve as guidance in your analysis, in that to validate a turn or to invalidate a turn, to hold a trend or to invalidate the trend, right? All things held constant, divergence, 3-point divergence into a trigger break, that's pretty constructive. We need to see follow through in price, okay? Monthly open resistance, 93.46. Here's what it looks like on the intraday chart. Actually, let me just add, sorry about that. the monthly open here. Hello, Mike. As usual, few pairs: Swissy, Aussie Cat, Sterling Cat, and Euro Pound. Thanks. I got you, Martin. No worries. Um, so here's the intraday chart, and here's what we've been following with the DXY. I believe it was early in the week. I'm sorry. Where's our last DXY update? Well, it's been some time since I gave you guys an update on DXY here, so we'll do that tonight. But here's the slope that we were following, right? Here's the slope that we were following. All things held constant, despite the fact yesterday's trade was awesome. We simply have made a full round trip. Here's your weekly open. You drop, still holding slope support. There's the 2018 open, divergence. Again, trigger break here and momentum was also a tell. Upside, here's failure at the objective weekly open. Okay, so while this slope has broken, it looks pretty decent if we hold that gradient low. This is the break you need to mark essentially a near-term reversal in price, right? August open 93.46. You're looking for the 94 handle right up here. That's going to be your monthly opening range highs. And then beyond that, you're talking about, larger scale correction. Right now, the focus is on the weekly opening range. The play was to the trade into here. This pullback needs to find support, ideally ahead of 92.55, and then a break higher to see at least some sort of shift. Now, I'm going to just, I don't want to confuse anyone, but I'm just going to show you what this looks like near term if we do get the break of the weekly opening range to the upside. A pitchfork like this is what I'll be focused on. All right, so what does that highlight? Well, in time, it highlights the August open along the median line on the breakout. And then it highlights a move higher beyond that, right? The monthly opening range highs converge right on that upper parallel. So it's early on, right? So you don't want to put too much emphasis on these brand new slopes we're just adding. But if this does give us guidance, a couple of things to note, a couple of things to add some color to what we're looking for. Maybe some support right around here, 92.80s into the open. But certainly, the break above the monthly open would be the fuel for a larger recovery. Okay, as of now, it's simply a bounce within the broader downtrend. Of course, there's signals on the daily chart, signals on the weekly chart that are highlighting the possibility for a larger correction. We'd need to see at least a break of the monthly opening range to validate such a scenario. All right, so that's sort of the DXY in a nutshell into the close of the week. Those are your top side targets. Again, I'd want to see failure on any pullback ahead of 92.55, which is the monthly opening range lows, if this was just a false break scenario. Don't want to see anything beyond that. You'd need to see a break below 92.28 to mark resumption. If that happens, there's really nothing until you're basically looking for the 2017 low day close, like all the way down here, 91 and change. So it's big, man. We're at a big level for the dollar. It's been a dramatic decline. You've marked divergence with a trigger break into resistance. The weekly chart has had a 9-week consecutive decline. Exhaustion is what we've been looking for initially. Cautiously, I say that's what we're starting to get. Now, where does this translate into prime FX pairs, right? Well, here's what euro looks like. Number 2. So real quick on the weekly chart, similar scenario here. You're seeing the same exact thing as the DXY 9-week stretch, consecutive advance. If we take a look back here, there was a lot. We've been warning about some sort of exhaustion since 1823. It's been tough. Last couple of weeks, we've probed well above into the 19s, but man, is it still hairy level. 1823 is the 618 of the entire 2018 decline. On an intra-week basis, you have slope just off of this year's low. Resistance, resistance, even this week, resistance. If this is a breakback within the confines of this multi-year pitchfork, which added on the breakout and on the recovery, then this slope, 25% parallel, is also right here. So basically the whole long side trade, while we love the long side of the euro, and we still do, the broader picture, you're at uptrend resistance. You can't get excited here. Disclaimer, I'm still sitting in a short. It worked out. I told you guys I took a short early in the week. I got stopped out of that one. Got another signal, jumped right in again the following day. Sat in that for a day before it finally crashed yesterday. Took a third of the trade off at 1822. So we're looking for some sort of reaction right here. Here's what the euro looks like on the daily chart. All right, levels of interest that we've been following. Okay, well, this is what it looked like last night. Levels of interest, as always, guys, you can always find the weekly and daily charts one click away, the previous update. On the daily chart, the focus was these two levels up here, 1910, which was basically your yearly highs, and you had 1961, which is another swing high from a pivot from back here in 2017. Both converged on the upper parallel, right? And that's what we were highlighting early in the week. So you drove into it. Here's yesterday's candle with a nice pullback. You're still trading above the 618 retracement. It's the same exact trade as DXY. This is the monthly opening range. If this was a one-day false break, you don't want to see any rallies go beyond 1915. And that's where my stop is, just above that. And that's in the money stop. Our entry was, just above, just shy of 1950. So that's how you want to play this. Next move down beyond here, you're looking for the objective monthly open. That's 117.71. And then once you get into the 17 handle, guys, now you're talking about a big figure. Now you're talking about the objective monthly opening range low, right? It's, again, not Mike Boutros' opinion, not Jamie's opinion. Fact. These are the levels I love to play. This is where I live right here. What's your target on the downside to close out the rest of your position? So let's go into the intraday charts here, and let me give you a picture of what we're looking at. So again, this is what we look like early in the week, right? We were looking for a topside exhaustion somewhere here. Weekly open support 1838. We've already taken that out. Here's what it looked like last night. And again, I've ditched this upslope. All right, let's do that. Here's what it looks like. Here's the upslope that we were looking at early in the week. I know this might seem a little messy for you guys at home, but I wanted to highlight this pitchfork last night because if this is in play, again, the median line highlights what? Objective monthly open support. I love when the levels converge on slope, and they're objective levels. They're not up for debate. Did you take the retracement from this high or extension from this? No, it's just fact. It's where we open, 1771. That's going to converge on slope. So for all intents and purposes, we can go ahead and ditch this just to clean things up. This is the same slope that we're looking at here. Okay, so we still want to see that gradient hold. 618 of this near-term drop, 1907, 1910, that's the max. Again, the weekly chart or the daily chart just a moment ago, we showed you 1915, right? Right here, or 1910, that high from back here. Here's the same level. It's also the 618. It's also former slope resistance. Later on in the week, or tomorrow, basically, it converges on the upper parallel. But basically, that's my, I don't want price to go above that if we are moving lower on this stretch. And it's important to note that in euro, unlike some of the other majors we'll go over today, which did post outside day reversals, didn't give you such a signal yesterday. It was a very nice reversal candle, but not quite the strength of the outside reversal signal. So immediate downside targets, to answer your question, Rohan, again, just my humble opinion, man, what I'm looking for is 117.98. I just have 118. Okay, probably take off another quarter or some there. The big level that we're going to need to kind of pivot through is 117.71. Objective monthly open. That's where the median line is. If this slope has any merit, that should give us something. What does that mean? Well, once we drive into here, you might get a stronger recovery, in which case, either way, I want to be out of the short. If we break through, you're likely to see an accelerated drop, right? The monthly opening range lows don't even come into like 117. So that's basically like a 70 pip drop here with nothing in between as far as, critical mass levels. So 2 levels of interest, Rohan, that's the break you need, okay? And then we're off into 117 and beyond. Again, all within the confines. It's extremely important for everyone to keep this in mind, all within the confines of a broader rally. People get super excited on this, and all of a sudden they're loading up on the shorts, and all of a sudden I get text messages, are you looking for 114? Whoa, 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 chill, right? No one's saying trend reversal. It's trend interruption. You're at uptrend resistance, and uptrend's not going to keep just plowing through every resistance level. It's been a 9-week advance. Give me a break. That's all we're looking for. All right, so keep that in mind. Yeah, I think maybe more opportunity for DXY strength in other pairs, for sure. And certainly you've seen a more profound move in some of the com block, and we'll look at those in a moment. But for all intents and purposes, that's what I'm looking for on euro. I'm not gonna lie, I loaded up pretty heavy on that, so I'm glad that I'm out of a little bit. But we'll see if this holds. Dollar CAD's number 3. So here's where we got into some like crazy levels. Dollar CAD did make a pretty strong reversal yesterday. Again, not quite completing an outside day reversal, but pretty damn close. Here's what dollar CAD looks like, first of all, on the weekly charts. The main reason that we've been sort of tentatively looking for recovery, we talked about 33.60, 33.20 for a while. That held for 3 weeks. Last week it broke, but look where last week closed. Still within the confines of this multi-year uptrend pitchfork. So again, weekly chart requires a weekly close, a parallel of the same slope, right? Extended off that low from early in the year. If we close right here at these levels, it's actually going to be a hold of uptrend support. Long story short, the big focus here was, yeah, there's risk for exhaustion. You broke a big support level, but you're coming into multi-year uptrend support. Momentum is at its lowest levels that we've seen since 2017. It's not a typo or a misspeak, that's true. So it's make or break. A settle below 40 here on a weekly close and settle below these slope series would be just, a straight break of a multi-year uptrend. If we get the validation, great. But on intraday, the risk is for exhaustion. Here's what it looks like. So there wasn't a play here. I don't have a position on this, regrettably, but we're not out of the woods yet. We're not out of the woods yet. It wasn't a decent reversal. Certainly, we've been getting some divergence on these moves into fresh lows, right? Again, the exhaustion move. This was a break of the monthly opening range. We've been here for 2 days, so I'm more cautious that dollar CAD. If there's going to be a fake out and the dollars can continue to tank, dollar CAD's going to be the one. Dollar CAD's going to be the one. There's just so much push behind this that if the dollar just doesn't get a relief, I think this breakdown here is going to see some accelerated drops. That said, here's what dollar CAD looks like on the intraday chart. And here's what it looked like last night. So we highlighted again that divergence into the low, the 88.6 retracement at 131.51, which is we talked about support. You got a brief dip below there on building divergence, but it held, right? Initial resistance was 32, which was a big level last week. Here's a 32 pop, and check up support. If this low holds into the US trade session, specifically last week's low, like give it to 32, basically 31.90. You'd look for a completion of a little bit larger of a bounce, 32.70. That's your bearish inval at this point. That's what would shift the broader focus for a larger correction. Until that gives way, you're just trading a rebound within a broader downtrend. There was a lot of moves yesterday. This one wasn't really the most compelling. It wasn't the most, radical, but certainly the levels of where it's happening, I think, does warrant our attention. So that's dollar CAD. It's still holding this ridiculous pitchfork, which has been in play for so many weeks. Super clean. You don't get them too often. Respect the breakout if you get it. Till you do, look for exhaustion near slope resistance. That's dollar CAD number 3. Number 4, Kiwi and Aussie. Here's the again. These are, I think, some of the bigger heavy hitters that we saw yesterday. So from a weekly standpoint, y'all remember where we are in Kiwi. Let me just show you a quick reminder. It's the close of the week here. Here's where we're trading off of. We had 3 levels of massive critical resistance that we were talking about, and they basically stacked up right here. 2019 open, you had 67. 67.33 was this year's open. The 618 retracement of the entire 2017 decline, 67.60. So you're basically looking at like a 60 pip range of insane resistance. Just in case that wasn't enough, the yearly opening range highs are there as well. We ran into it early in the month. We pulled back. Last couple of weeks has just been slow drip, slow drip, slow drip. We reminded you guys many times of the non-confirmation high that we've gotten with Aussie and Kiwi, namely that Aussie has broken its yearly high to fresh yearly highs, while Kiwi has not, and how those are very indicative of market turns, market exhaustion points, market reversals. So the focus this week, as we were starting the week, was on a break of this range, 65.07 to 66.28, the 100% extension, okay? This is the close high that we made on this rally and the pivot break that we made back in July. If this near-term channel, real steep, I hate these, but if the break is legit, that's where we should have found resistance, and a break below 65 is what gives you the validation for the turn. Well, guys, you know, this week's high scratched just higher. It was 66.51 over 66.30, a 20 pip stretch beyond resistance, but we pulled well back. If we close, settle the week sub 65.07, yeah, you're looking lower. What else do you want? We have, yeah, it wasn't a very strong divergence signal per se, but a 60 hold in momentum as resistance was checking, as price was checking multi-year downtrend resistance. Yeah, I'll take those signals all day long. So watch this week's close with respect to 65.07 for the weekly chart for validation. Here's what it looks like on the intraday. Okay, yesterday, really nice reversal candle right off of that pivot range right there. Again, 66.28, the same level we're looking at the weekly chart. That's also this month's open, right? So as opposed to some of those other trades where they looked like they had made a break of your weekly opening, the monthly opening ranges, you never got that here. Here's your monthly open. You set a high, you set a low, you check the low, you try to go for a run in the high and you fail at the monthly open, a pivot technical resistance, big reversal candle. Yeah, if we break these lows, you're looking lower. All right. Initial support, I'd be looking for a reaction near the lows that you made from last month, those swing lows right there, which converge somewhere around slope, just around 65 or sub 65. Bigger support, 236, 2018 low. You're looking for 64.24. That's just an initial target, guys. Very, very conservative, in my humble opinion, if this is going to be a corrective move. Here's what it looks like on the intraday. So when we started the week, our bearish invalidation level was 66.40. I talked about this yesterday, how, you know, we kind of ripped through 66.40, but it quickly reversed. Even if you had missed this, or even if you had, we were looking for a position here and it kind of broke, and so you were like, all right, 66.40 was our bearish inval. That just gave way. The reversal candle, a 2-hour outside reversal candle, took you right back below. The next candle tried to execute a pull of the high, and that failed, and that was another opportunity to get in. This had exhaustion, failure written all over it, momentum, with not just a trigger break to the downside, but a break below 70. That's typically your strongest signal, right? First level, 65.80. Second level, weekly open, 65.42. This is a break of the weekly opening range. So if this is legit, I don't have any exposure on this left, unfortunately, again, regrettably, but if this break is legit, a recovery today, anything on the rebound should fail at the weekly open. Next downside target's unchanged, okay? You're looking for that 65.02 level. The lower parallel comes in, you know, in time will be variable. So like 64.75 is where I'd look first into the US trade session today. But the 100 off the high is 64.60. That's a more convincing target in my opinion. So levels look decent. You know, I'm not crazy about the fact that we broke the pitchfork and fell right back in, but we got to pivot along the median line. Things still look pretty good, guys. We'll work with this slope until we clear it with a more definitive break to the downside, or there's reason for it not to. But as it stands right now, focus is lower sub 65.42. Questions on Kiwi. So again, the one the one I am actually very sort of pissed off at is Aussie, because I was looking for entry on this last night and there was a decent entry and I was kind of cherry picking and I was, oh man, it was a pretty crazy stretch. Maybe I should wait for a bigger bounce. I came back 2 hours later, like right before bed, and it had already started to break. So um, again, the aspects that we talked about before with the relationship with Kiwi, the fact that on an weekly chart, here's Aussie. I showed you guys this again Tuesday. Basic trend line resistance from the 2008, 13 high, 2014. Just missed it there. Look at that tag. Look at that tag. And again, just ahead of that, just like you did in Kiwi, right? Both of those were coming to levels where like, I don't know, man. There's so much stuff up here. Any one of these could catch, right? We had last year's open at 72 and change, or 73 and change, 72.95 right here. And then you had the swing close or the swing low from 2017 May mid-year was like 73.28. So we were just looking for exhaustion, right? A little bit harder of a call here because momentum was in overbought or essentially above 60 for the first time in a couple of years. Again, a trade that's, you're still in the uptrend, but great place to find exhaustion. Here's what it looks like on the daily chart. Aussie did post an outside day reversal off the highs yesterday alongside sterling, alongside dollar yen, really nice moves. Outside day reversal off of yearly highs typically is even stronger. And this is why as soon as we closed yesterday, I was essentially on the lookout for some sort of recovery to sell. You got it. It was real shallow. I missed it. Hopefully some of you guys caught it. But the next downside move or the next downside level of critical significance is going to be 71.25 into 71.30. I cannot stress that enough, my friends. It's the 618 extension from the advance off the low. That's the weakest of the three signals. It's the 618 retracement of the entire decline from the 2018 high. Key fib. It's the objective monthly open for August. Objective fact. The monthly opening range lows are just a couple of pips lower at 71. So you're basically, that's big level for Aussie. A break below 71 would essentially break all of those technical factors we just listed and be an objective break of the monthly opening range lows. Add to that on a weekly basis, if that were to happen, we're now talking about an outside weekly reversal candle. Now, these are all like speculative, guys. It's not Friday. We still got a whole day 2 days of trading. But I'm just giving you the picture of how significant, because of where we are in price, if these things materialize over the next 2 days, could be pretty telling for at least some sort of correction. All right, so I'm favoring the move lower. I want to see a move into 71.20, 71. I want to see a reaction there. Sub 71, you're looking for a drop into key support. This year's open, last year's open, 70.16, 70.42. Here's what the intraday chart looks like. And by the way, slope is in there too, basically into the 26th, into the start of next week. Here's what the intraday chart looks like. Here's where we were last night, right? We had stabbed into here. I was like, man, if we get some sort of decent recovery, you could get a short in here again against 72. Man, it didn't even get high as 71.80, 71.90 rather. 71.86 was like the swing high, and then we just continued to settle. So look, I'm not a fan in jumping into this. There's nothing to do here on the short side if you're not already short. Even if this does break and accelerate, guys, it would just be luck if you take a short and make money on it. There's no discipline here for entry of a new short. So I'm looking for re-entry. I'm looking for, some sort of corrective bounce, maybe a move back towards the parallel, maybe a move back towards the 75% line would be a nice entry possibility again for an entry in. At the end of the day, if you're holding shorts, the major levels on the downside, again, 71.30, 71.28, and then the objective monthly range lows. The monthly range lows are actually 70.76, but I just want to highlight this whole zone, right? Last week's low, monthly low, slope. That was a mouthful, but that's Aussie. This is the one I've been tracking most closely outside of what I'm actually in because I loved the outside day reversal yesterday. I love how it happened. I love that Aussie Kiwi maintained that non-confirmation, and before we get too excited here, we do need to see at least some monthly opening range breaks to the downside, at least more conviction moves on some of these rebounds, a breach in the DXY. Okay, that's number 5. Number 6, let's hit sterling real quick. Also, beautiful outside day reversal yesterday, right off resistance, kicks the focus lower. These trades don't get much cleaner. And it's great when this is happening, guys, because this is just as, and working with other guys on the desk and working with daily effects, you hear the chatter of what everyone's looking for. And everyone's been like, oh, well, volatility is real. We got to adjust our strategy because volatility has been so contract. And then these, boom, you get these moves where we just came off of big levels. And unless you're paying attention to the technicals, you got no freaking clue what's going on, right? Unless you're paying attention to the technicals, everyone's trying to fade this move, right? Oh, it's a great opportunity to move in, right? Aussie's just been rallying. Sterling's just been rallying. Well, not so fast. Here's where Aussie just turned from, guys. 2020 objective yearly open 618. Is it? I'm sorry. What is this? Yes, the 618 retracement of the entire 2018 decline. Just higher, and this is why I highlighted both these levels this week. 3250, just higher. You had 3310, 3330. That's the 100 off the low and last year's high week close. Well, here's the initial approach. You had a couple of slopes. This is just a basic trend line. It's only 2-point touch till earlier in the month, and that was a third point, so it's something we're looking at. Within the confines of the recent advance, here's support, parallel, resistance. Resistance on a closed basis continues to hold. Laterally, it was all about 3250. Momentum, grinding into 60. All the hallmarks that you look for a possible exhaustive trade are here. Now, again, I say exhaustive because it could turn into a larger correction, could turn into a reversal, but that's not what we're working under the assumption. Right now, the only assumption is that it's an exhaustion trade within the uptrend. Here's the daily chart. Again, not, what's the word I want to say? I guess it is technically an outside day reversal off of fresh yearly highs, but not by much. So what I want to say is this is essentially, to me, looking at this, is a check of the 2020 opening range high and a failure. So we tried to break the yearly range highs. Note that the yearly open is right here as well. It's been a rough year for sterling. So yearly open is the same as the yearly opening range highs. That's where we turned with an outside day reversal candle. Hell yeah, I'll take that all day long. And you have divergence into that high. Beautiful setup. Beautiful setup. So in the initial pullback, sure, this is your first area of support. Objective monthly open. Again, not Mike Boutros' opinion, fact, 130.80. That's what's hanging us up right now. Here's what it looks like on the intraday chart. And here's what we look like. Oh, so for Aussie, guys, super clean. No change to any of those levels from last night, right? Ultimately looking for a hold below this slope for this next downside targets. Here's what sterling looked like on our previous update. We talked about this being massively critical resistance on the weekly chart, on the daily chart, and boy, did it just hold. Here's the pullback. Right into the weekly opening range lows. So again, one of those trades where you saw a big spike, it came off of a big resistance level, huge uptrend resistance, but guess what? Now you have a whole new signal, opportunity, factor, whatever you want to call it, evidence with the weekly opening range. Here's our weekly open. You set a Monday, Tuesday high. Great. Check it again on Wednesday. Great. Check the lows on Thursday. Awesome. The range is still holding. If we break the downside here, yes, you do need to be mindful of this support here near 130. Yes, the lower parallel, but objectively, that would be a bearish bias, and you'd look for a break there to give you acceleration. That's why I think the risk for sterling is for a washout, a vicious one. Now, I'll show you this, but it's not. But I don't want you to run with this just yet. I don't have much conviction on this being what I'm going to operate off of per se, but there's a couple of different slope interpretations you can look at, which would basically keep you looking lower still against 132. Okay, I don't have any conviction on using this just yet, but just a couple of things I'll be looking at over the next couple of days. If it does make an attempt on 130, you want to get some definition to the decline. You want some structure to the descent, and that's kind of what I've been going back and forth with. We'll see. First things first, want to see this can then continue lower. 130 is going to be the tell for sterling. Questions? Near resistance on sterling. This was huge resistance, Rohan. Massive. 32 to 32.50 on every level chart, weekly, daily, intraday. It's all right here. So the threat is for a larger recovery for the dollar, a larger drawback, a correction for sterling while below this zone. So right now, near-term resistance initially is going to be right back at 32. Support is 30.80. That's the objective monthly open. You need to break below 130 to validate a large return. Make sense? Right on. I got you. You know, the funny thing is, Rohan, I bet you if we tack on a quick retracement, that'll be pretty darn close to the 618. Woo-wee! 31.90. Right? So like real near term, you'd look for a possible exhaustion high right there in that nestle crack on slope. All right, so that is sterling, dollar, yen with the third outside day reversal that we'll be talking about today. I mean, this one had a massive one also. Boy, coming off some pretty big levels there as well. So dollar, yen, it's kind of been the abominatory, but we kind of love it for a little bit, but abominatory. So if you guys recall, we shifted our focus dramatically higher on the attempt into 104. Was huge. It's 100% off the high. It was almost two exact legs. You got the swing lows from last year. You got the close, the weekly sort of gap where we opened in that March debacle, all right there. That was a beautiful long signal. The exhaustion here, ahead of resistance, shifted the focus back towards 105.20, which is the same 618 of the yearly range, or the yearly advance off that March low. Look what just happened here. That's all to say that the weekly chart doesn't give you much, right? As far as the weekly chart's concerned, this is really the dominant range. 105.20 to 107.60 is like massive. But that's neither here nor there. Here's dollar yen on the daily. So once we failed here at the 38.2 slope resistance, turn lower, we were talking about two major levels. A, monthly open support, which was 105.75, and B, 105.20, key support. Okay, so even the near-term advance, just off the lows, you had a 618 there. Again, the 618 we just talked about from the March lows, that's there. In case that wasn't enough, guys, this also is defining the monthly opening range lows. And what did the abomination do? It went and posted a big old outside day reversal right off that support. Technically, all things held constant, that would be constructive. The last time we got an outside day reversal in dollar yen specifically was right here, and that was pretty fruitful. Yeah, you saw a little interruption, but we got to new highs. Do I think the same thing's going to necessarily happen here? Not necessarily, but this reversal takes you back through the monthly open, takes you through near-term downtrend resistance, which I'll show you in a moment. And while we're failing right here again at 106, I think there's still a risk for a little bit of a pop higher here. And that would kind of be in line with further dollar reprieve, right? A little bit of a dollar exhaustion pump higher. Here's what the dollar yen trade looks like on the intraday chart. And here's what it looked like earlier in the week. Again, the major level of support that we were talking about after we broke here, it was a really nice break early in the week. We talked about that. But the key level was 105.20. Here we are, 105.20. Look for some reaction there, I told you. So you got to drive. You even got a deeper drive, divergence up the Azu. Here's the recovery. Breakout of descending channel. Shifts the focus right back up here. This is sort of initial resistance, which we're holding right now, 106 into 106.10. For me, I leveled it at 106.30. That to me is what would sort of shift things to suggest that maybe there's a more significant low here. Maybe this broader correction, as it were, has one more high to make. So for me, it's all about 106.30, right? So right now, initial resistance is 106.07, 106.10. Initial support objective monthly open 105.75. That's key resistance. I'd want to see a reaction there. I'd want to see a reaction there. Questions on dollar yen? All right. Gold. Here is gold, and then peso, and then I'll jump right into your questions, guys. Here's what gold looks like. So here's our last gold update. It's been kind of messy, grant me that. So the level that we were looking at, 1994 into 1992, right into the start of the week, that's what I told you guys to look for resistance. It was pretty big for me. It's my favorite Fibonacci confluences, 618 retracement off the high, at 100% extension off the low. Both of those converged on a nice pivot region that we've been watching on the longer term chart. So this was for me big, right? Once this plowed through, I was like, wow, okay, we're basically looking at possible resumption back to 2030. Well, not so fast. Big reversal candle. This is just 2 hour, but big reversal candle drove right lower. And I think things started to change, right, with the tone on the dollar finding some support. Once this broke, I think it changes the picture here. So broke back below this 84, 94 sort of zone that we've been watching, plummeted. Here's your weekly range lows. Here's the 2011 high. So for me, I do think that you risk a deeper cut in gold. I think at this point, again, my humble opinion, this is resistance. It's sort of an ideal scenario. It's actually your monthly opening range low. Here's your August open. So this is where you spike the low, you crashed, obviously, and offered some resistance, but also figures on slope. Want to see 1960 hold resistance, a break below here. I mean, we have slope that we've been tracking, guys, but man, I think there's room to the downside. I think there's room to the downside. Now, again, if we do get that pivot, you do want to look to reassess the slope. So we'll look to add something with a little bit more gradient, right, to give us a little bit more of a picture of what near-term price is doing. Maybe put a modified on that one, something I'll be checking out maybe later this week if we break lower. This is what it would look like, just for the record. If we do work with such a modified slope such as this, look what it highlights. Resistance and bearish invalidation right at 1994. Love that. Downside targets on a break at the 38.2. Just a simple 38.2 takes into 1836. That's the risk we're talking about, guys, for gold if we break this slope. All right. So ultimately, right here, yeah, we could see some upside in gold today. 1960 would be the ideal choke point. 1994 bearish invalidation. Just move these pivots around for you. If you get the breakout level, again, right on 2030 again. Questions on gold? All right. Last but not least, from my list, number 9, here's Mexican peso. So it's actually been a decent sort of range that we're breaking out of right now, and it does definitely suggest that we're back on the recovery for peso. Not surprising, actually, again, lines up pretty darn well with the whole dollar recovery, dollar reprieve, as it were. A couple of things I do want to note. I need to fix this up. Bear with me one sec, guys. Okay. So what I wanted to highlight on this is that I always try to highlight perfect examples of opening ranges whenever I can, because I do get a lot of questions on that. Here's what it looked like at the open. So you open the week, you grounded into 2188.97. That was the level we were talking about. Pin that quick reversal right off that. The weekly opening range was straddling this pivot zone. We don't want to see that, but it straddled pretty nicely. Same highs, same highs, same highs. This move that we just made this morning not only broke the weekly opening range, but it broke through the monthly open. It broke the 618 retracement that we've been tracking of the July advance, and it broke below near-term slope resistance. So it does shift the focus higher. 22.40.72 and 22.52.56 to be your next upside levels. I wanted to leave this consolidation just because the slopes were actually pretty cool how it played, but let's give this thing some color, shall we? I do want to see what a basic gradient like this looks like. And then also on the low, high, low. Let's just see what this looks like. The 618 comes in. We'll have to revisit this. It's too early. We'll have to revisit this too early. But for now, break of the initial weekly opening range, break through the 618 retracement, break through the monthly open does give you a little bit of a lift here for peso. Questions? Okay, that's last from my list. Let me get through your questions here, guys. So you wanted to look at dollar Swiss, a great trade. I've been kind of like sneaker sell attacking this one, but it's actually been a pretty decent trade. It was really nice because you got the confirmation basically with the move they made in euro as well. So look, I want to see support ahead of 90.80, if ideally ahead of 90.80, like right here. All right, bearish or a bullish inval for the recovery is right here. I constituted this as a break of the weekly opening range, so that's what gives you the near-term upside bias, and a false break of that critical support zone. Remember that. Do I need to adjust that? Yeah, hold on one sec. There we go. That support zone was huge. Here's what it looks like on the intraday. Right? Huge level. So I'm inclined to kind of ditch. Let's do this. Let's just ditch this pitchfork at this point. The same gradient. It's a pretty decent touch on the gradient. But we don't need that. The only thing that we need is the larger picture. Here's the pitchfork that we've been working off of 2018, 2019 highs. Here's the median line, lower parallel, 25% line, catching support, catching support, catching support. The big retracement levels that you need to pay attention to, more importantly, I showed you this last time, are the 38.2 retracement of the entire advance off the 2011 lows, and the broader 618 retracement from the advance off the 2015 lows. Both of those give you 90, 80, 90, 90. And we did close a day or two below, but man, we popped right back through. If support holds here, you look for a breach of the monthly opening range to validate a larger reversal here. Same type of gig, guys. I think this one's a really good one. Marching. You're also seeing, again, divergence, price action, lower low, lower low, lower low, higher low, higher low, higher low. Again, see it here on the line chart. So the hallmarks are there. We just need to break some damn downtrend resistance. That's all. All these trades are coming off of uptrend resistance. Downtrend or downtrend. They're coming off of uptrend resistance, or they're coming off of downtrend support. But you haven't gotten the break yet of uptrend support or downtrend resistance, right? So you kind of want to see that start to pick up the pace. Does the Kiwi break of 65 right now trigger a short trade? Well, I can tell you right off the back, I don't trade like that. I don't usually take a break. I usually won't sell a break, because where's your stop on this, man? Rohan, don't get too excited, brother. We have to stay disciplined. Yeah, no, I would never sell a break. There's nowhere to put your stop if you're not already in this, which is why I was telling you I was a little bit teed off on this one, because or specifically me so on the Aussie. I was trying to play this on the Aussie more aggressively. I think there was a better opportunity to jump in there yesterday. for Aussie. This one just collapsed. Yeah, there's nowhere any what respectable stop. And you have support just a little bit lower. So to answer your question bluntly, no, um, I would never sell down here. Okay, if it the trade on this one, Rohan, is if it were to recover from here, you'd look for failure here. Even if it doesn't get all the way up into the weekly open, but it spikes and then it starts to move lower again, then you have a trade high, a swing high to trade against, right? Um, Knowing the direction is only 50% of the game. Okay, it's all about discipline and always maintaining proper risk management. Okay, let me run through these other ones for March in here. So that was dollar Swiss. Aussie CAD. I have these highlighted because you guys are always asking about them. So I like Aussie CAD a lot. I like Aussie CAD a lot. It was a really nice outside day reversal candle there off of the objective monthly open resistance off of slope. I like the trade. You're at near-term support though. Okay. The initial soft target that we had highlighted was that 100 off the high. Okay. It's still basically the lows they made for the month. So yeah, it was a nice break of the weekly opening range, a reversal off of trend resistance. I loved it. But this is the first level to watch. 94.52 could see some support here. Want to see resistance ahead of 96 if this is heading lower. A break of the opening range lows for the month gets you right back onto 93.52 in my opinion. But this is a lateral pivot that you just need to respect. Marchin, does that help? On Sterling, on Aussie CAD. Here's the daily chart coming off of uptrend resistance. Really nice move, right? I just want to highlight again, it's corrective within the confines of the uptrend. Okay, so yeah, we're looking lower, but man, this was a clear-cut breakout any way you slice it. Act accordingly. Okay, and last but not least, yeah, two more there. Pound CAD. Pound CAD. I thought I had that one. Oh, I have Pound Aussie highlighted. Pound Aussie was very interesting this week, but yeah, Pound CAD. Let's take a look. Ugh. Um, I don't like this. It's is that a gradient? Nope, not even. So when I say something like that, let me take a step back. When I say I don't like it, is because comparatively speaking, whenever I'm jumping into a trade, you want something that's close to resistance, close to support, close to a high, close to a low, close to a confluence region. You're nothing here. In fact, this is almost on the week. Here's your weekly open, right? You set a weekly opening range low, set a weekly opening range high, defend the weekly opening range low, and now you're right back at the weekly open. There's nothing here for me. This is like range galore. You know, I just think Marchin, there's so many trades that just broke the weekly opening range that just made big reversal patterns. I'm not going to sit here and try to pick out a trade out of this. There's nothing here for me. The big move for me. Let me take a step back. The only thing that would matter for me on a trade like this. Okay. Let me took off the wrong retracement. The only thing that would matter for me on a trade like this would be either a clear-cut breach above 175, or clear-cut break below 172. That's it. Until that happens, this is just noise. Yeah. So might be something where I think you do get the move, but Marchin, comparatively speaking, Sterling and Cat are both kind of having their own little heyday right here. So I'm not surprised to see this price action. Last but not least, Euro Pound SPX. Real quick look, I don't have anything on the SPX levels, guys, because it is just grinding into resistance, and that's all you needed to know. Um, you know, I hope some of you enjoyed this. We've been talking about 38.87, 33.87 rather, 33.97 for like last 3 weeks. You had the high day close in there, the stretch high in there, the high close in there. I mean, so everything was all loaded up. The slope resistance in there. Yesterday, you posted an outside day reversal, almost. low. Yeah. He says, not sure what to do with it now. He says, yeah, caught some last night. Okay, Rohan, so if you're in SPX, again, can't tell you exactly what to do. Specifically, my humble opinion, I would still be looking for further downside. So I'm looking for a confirmation high. I was looking at this slope earlier. I don't want to necessarily work with this just yet with any conviction, but what does it mean? You still look for resistance, same level. You still look for support on a deeper cut. Now we could put on a retracement here. Again, if I had a little bit more validation that this was indeed a turn, that this is a more significant high, I would like to tack on a quick retracement, look for the 38.2 and where it converges on slope. Let me just do that with you right now since we're here. Okay, let's clean this up a little bit. Doesn't even matter. Same exact levels we've been looking at. Same exact levels we've been looking at. Boom, right here. So I'm going to stick with these as is. 236 highlights the 3301 level, which is a level that we've been watching for a while. 38.2 highlights the key yearly open, 100% extension. 32.19, 32.26. Again, a region we've been watching pretty damn close. Pretty damn close. So, guys, if you're ever again doubtful of technicals, you have your doubts on whether this is all witchcraft or whether there's really something up here. Let these moves speak to you. Okay. I would remove this from the daily chart, but key region we've been watching for some time. You'd need to move below 33 to convict any type of correction. So 32 target. No, I wouldn't say 32 target. I would say right now, yeah, 33. Yeah, that would be the level that you'd need to break, Rohan, to convict a short bias. Near term, initial focus, 33.37. That's your first level down. It's the January high. Okay. If that breaks, 33.01, that's the big Bahama. You get a break below that. It's a basic break of 236 retracement. It's a basic break of slope. It's a basic move of a pivot that we've been watching. All right. Last but not least, really quick, I doubt I'll have a lot to say, but let's look at Euro pound for Marchin. And my expectations were right. Yeah, there's not much for me here, Marchin. This is consolidation. We tried to look at this within the confines of this break of the channel, and while the pivot has actually offered decent move, the only thing you want to kind of focus on here, clear out all the noise. Clear out all the noise. This is just basic consolidation. I wouldn't even be using this pitchfork. You know what I mean? Play the levels. You want to play the interior until this breakout gives way. I mean, you're just, there's no trend, right? You're range trading. Okay. Marchin, I have to run. Euro Swiss, you're killing me, brother. Let me take a quick look just to see if something's going on there. Similar scenario. You tested the range highs and failed. Actually, Euro Swiss is actually a good candidate for a large return, I think. Because the dollar Swiss rebound, I think, has a little bit more guts in it from where it's coming off, relatively speaking, on the longer term chart. So this might be a larger move to the downside, I think, with this failure. Just gunshot approach. All right, 9:30, well over on time. I have to run. Jay, thank you, sir. Have a great weekend. Marchin, Rohan, DJ, best of luck to you guys trading into the weekend, and I will see you on Monday for the free session, and then right back here on Tuesday and Thursday. Cheers.